Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today on the podcast, I have Quentin D'Souza. Quentin has over $80 million in assets under management across Canada and the US and has transacted over 80 properties since 2004 and is the author of 4 real estate books. Welcome, Quinn. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, and I just wanted to say, I can't believe you actually do the beginning part of that podcast every single time. That's so awesome. All right. I've been investing since 2004. I've really started getting involved in multifamily buildings in 2015. I was a teacher in the public school system. I got my financial freedom 2014. I got a little ring to remind me of that. And I started to realize that when I got out of the teaching profession, I ended up working twice as hard because I was flipping properties and doing so many other things. And then once I figured out I gave up a job to have 3 jobs, I was like, okay, I got to do this differently. So I started to raise funds into apartment buildings. I was raising funds in 1 to 4 units, and they were great for cash flow, but I wasn't getting, those net worth jumps. So that's how I really focused on apartment buildings, and haven't looked back since. Been growing, closed 202 units this 7 apartment buildings this summer. Another 12, another 20, and just keep going and going. I've got 110 and 14 or 17 and 24 closing in this quarter, 2022. So just continuing to grow into this and really enjoy it. I love it. And when people ask me, if I'm ever going to stop or retire, I told them I did that in 2014. I enjoy what I do right now. It's awesome.
I love it. I feel the energy. And when we met at the Jake and Gino conference, I mean, when you meet people in real estate, and they've gone, they've been in it a few years, the love for it, their energy for it is great. It's very contagious.
Oh, thanks. Yeah, I think so too. I think it's great to be in that type of environment and where you just relax and you run into so many different people, especially with the podcast. A lot of people. It's an honor to meet you when they do, because they only hear you, right? And it's pretty cool to get that sort of networking experience in person.
Yeah, absolutely. So today we're going to talk about repositioning buildings in a rent-controlled environment. I know a lot of investors like to stay away from these locations, but that means more opportunities for you. And I know you focus on that. So talk about your typical business plan for those types of properties.
Yeah, so in Ontario, where I focus on most of my acquisitions, we have rent control. And rent control in Ontario is that, for example, this year we can only raise rents 1.2%. Even though we've had all of that inflation, that's what a rent control environment is. But we are decontrolled when it comes to when we turn over a unit. So we're allowed to bring the unit up to market rent at that point. And that helps us tremendously, because that's how we are able to solve a problem for us and able to get huge increases in the NOI. And that's really what I'm doing, right? I'm special. Like, I look at a building, I look at where the rents are and where I know I can take them. And then when I see, for example, a rent at $900 and I know I can bring it up to $1,400, that $500 is it's a lot, especially when it's let's say it's a 4.5 cap building. multiply 500 by 12, divide by 4.5 cap. That's like several $100,000 lift in value. And if I have a 20 unit building and maybe I do it out of 6 units, times 5, that's huge, right? That's huge value lifts in buildings. And that's why I like it. Also because people don't like it. And, and you know what? I find that when it's a challenge and I can solve problems that other people can't solve, I can make money where other people won't make money. And I've specialized in this. I've been doing it for a long time, in this market. So I've been able to get results that have worked for me. I do typically the 3 to 5 year process of refinancing the building, paying the investors back, but we keep our investors in our projects. They continue to own it, and then they'll usually reinvest into the next project with us. So that's how we do it up here. It's very different, I know, because I've been involved with a lot in the US, and I can see how it's done down there. And a lot of times, because of the 1031 exchange and the way that you're able to reduce your tax burden, I find that American projects tend to turn over more. So like in the 3 to 5 year mark, once they've achieved their business plan, they'll often sell the asset and then move on to another asset. Whereas up here, we don't have the 1031 exchange. Taxes are pretty onerous. So what we'll do is we'll refinance to pull the funds out and then go into another project and keep that project behind. I think that if you do see some tax changes in the US, I'm going to guess that you're going to see less of that turnover between, the time when a business has, or an apartment building has achieved its business goal and selling it. I think you're going to see people are going to want to hold on to it more. But, that's just a guess anyways, because that's what happens with us here, right? Because we don't have those type of tax advantages and the same sort of, exchange of property.
I love that you said you're willing to solve problems other people aren't, and that's something I look for too, and that's a great differentiator because you have a lot less competition. You could buy things a little bit less expensive. So I mean that's fantastic. And you're mentioning time frame here in the U.S. Deals are these days because of where the market has gone. We sold 2 properties in under 2 years recently, and I think investors, their mindset has been shorter and shorter of late. Where yes, it used to be 3 to 5 years. Now they're looking at shorter. Now I think that's a short-term thing, given where we are with the economics and everything. But another thing that we have here, I'm not sure if you have in Canada, is the cost segregation study, which. So you're not as reliant on the 1031 as well. If I buy, if I sell a property and the 1031 doesn't work out, but we can do a, buy another one, get a cost seg study, and that's going to be going. Right now we have 100%, but next year it'll be 80%. The year after that, 60, and continue to go down. So that's another great benefit that we have here in the States.
Yeah, we have capital cost allowance, which allows for depreciation, but not in the same way as you have with the cost segregation and bonus depreciation and things like that in the US. So there is some differences, and I appreciate that because I have a tax structure that allows me to invest in the US without having a double taxation penalty, which is one of the things that you have to watch out for when you're investing in the US as a Canadian, because it could be very onerous. Imagine you get taxed, in the US, and then on the same dollar you get taxed again, like by the Canadian government. It sucks. So, that's one of the things that you have to watch out for too. But yeah, you do have that benefit and additional deductions in the US that I think are very beneficial for investing in real estate. But don't get me wrong, we do have those tax benefits. They're just not the same as it is in the US, but they are still much better than what you would be taxed income wise or dividend wise in the US. The capital gains is the lowest tax rate, right? So and there's also other avenues for you to offset your gains in a corporation with losses. So there are other ways to do it. I'm not a tax professional. I'm just an investor. So you better, talk to your accountant about that. But you need to have a cross-border specialist when you're looking at when you're trying to invest in the US.
And the way I understand it, the key thing is, if you're out of the country, you need to have a U.S. entity, an LLC or the like, and this way that gets taxed and there's holdback and whatnot.
Yeah, it's actually an LP. It used to be an LLC, but the tax rules changed a few years ago, and people are still telling Canadians that they have to use an LLC, but it doesn't work, and they will get double tax. So you have to have a structure with an LP, with the GP as an LLC, and it may be just like a 0.5% ownership, and then the rest could be another corporation as the LP, and that avoids the double taxation, keeps your liability in check, and then also gives you the benefits and avoids all of those the things you don't want. Again, I'm not a lawyer either, so you talk to your lawyer about that too.
Absolutely. Disclaimer noted.
Yeah.
So if you're in the US, are there benefits in investing in Canada?
Well, you see, there's so the reason why I invest in the US, I have a large portfolio in Canada. And the reason why I invest in the US is because of I want to have hedging against the Canadian dollar through the US economy and the US dollar. It's also a risk because you have fluctuations in the currency, which again can, we were in 2009, we were equivalent in currency, and now we're back to 127 for a US dollar. So that's a 27% difference. That affects your returns too when you're bringing money across. So the reason why I invest in the US because of that, and also because I can get US dollars, and we enjoy going to the places where we have investment properties. So it helps us to write those off against the income that we're getting. So it's a little different. If you're somebody who's going to be coming to Canada a lot, I think that there's some benefit to doing that for sure. And also from a hedging perspective, not having all your wealth in one currency is also, I think, beneficial to you, but it has to be part of your overall plan for sure. From a returns perspective, I can get higher returns in Canada with the investments that I do than I can get in the US. But after taxes, the returns are actually better in the US than they can be in Canada. So it's a give and take, right? And if you have an active business in Canada, you could also have additional benefits, right? So it's a bunch of give and take. Whether for a US citizen to invest in Canada, I would say there are 37 million people in Canada, and there's probably about 329 million in the US. You're going from a steamship to a yacht, right? You really want a really small boat. So you want to be careful when you're doing that. I think that there are other places around the world that you may want to invest in as well, and you should investigate that. Also, lending is challenging. So for me as a Canadian, investing in the US is a real pain in the butt. It's easier for me to have a GP LP type of structure where the GP is getting the financing done. And just because I don't have to worry about the financing on different projects. And that's one of the challenges. It'll be the same when an American comes to Canada and looks at financing, because there are really 5 major banks in Canada that have 85% of the market. In the US, there's thousands and thousands of banks, right? And so that's one of the challenges again that Americans will face coming to Canada. But if you can overcome those, I think that there are some good benefits to it. You just have to make sure that it is part of a larger overall plan. That's all.
And we kind of veered off to the Canada and US differences, but let's head back to the, rent controlled. So do you do a lot of cash for keys? So here I'm in LA, and actually they have zero rent growth for 2022, which is mind-boggling. But do you do cash for keys, and what kind of ways do you obviously you want to get that max bump, so you need renters to leave your property so you can get new ones. Talk about that.
Yeah. So, and ours was the same last year, 2021. It was 0% because of the pandemic related controls. But so yes, I do different sorts of methods. So I've written 2 property management books on managing property in Ontario specifically. So I'm very aware of what I can do and what I can't do. I don't play in the gray area, but I am somebody who looks to pay for tenants to leave, especially when other people aren't willing to do it because they think that it's my property and I shouldn't have to do it. And they're great, good for you. I'm going to do it, and I'm going to take the extra 100,000 in value that I create for it, right? And so, yes, cash for keys. I also work on turning over problem tenants, especially those who have been there for a long time. We work diligently through the system in order to move those tenants along. There are other things that we've been able to do to help us to do that. Large renovations, changing the use of the property. Just there's a number of things depending on how what's necessary to make it happen. I mean, the sad thing is all I'm trying to do is create better rental properties, and more of them for more people to make it because as we do well with these properties, more people want to invest, and we're able to do get more properties and grow and actually add to the rental pool rather than do anything else. But I mean, it's a challenge, but yes, I definitely have a number of strategies that I use to be able to do that.
And is Canada as a country rent controlled, or just different provinces
different province? Oh. Yeah, so Alberta is like Texas, and and Ontario is like California. So California and New York, maybe a bit of a mix. I don't know, right. But it's very different.
Right. Well, excellent. I think one last question we ask all of our guests is, what is your asset management superpower?
I want to say that my asset management superpower is definitely doing the repositioning of assets in rent-controlled environments. If I wasn't able to do that, I wouldn't be able to get the returns that I've been able to do and have the partners that I've had for as long as I've had them.
Well, awesome. Well, thank you so much, Quinn, for coming on the show and adding value on the subject of repositioning rent-controlled apartments and talking about the differences between investing in Canada versus the States. Please tell listeners where they can find out more about you.
Sure. I'd love to go into more about the Canada versus US thing, because there's a lot more to it. Anyways, you can get me at my podcast, which I've just started recently, getrealwealthy.com. It's the best place. And there's also a scoring system. So the scoring system that I use to identify, property opportunities is there. You can grab that. So getrealwealthy.com, or you can email me at quintin@getrealwealthy.com, or on social media, QManREI on Instagram, Twitter, all of those things.
Awesome. Thank you. To all of our listeners out there, thanks for listening in. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and review this podcast, as it will help us grow our audience and reach more people. And if you'd like to learn more about what we do, head over to breakofdaycapital.com and sign up for our newsletter and get on our investor list. We'll talk to you next week. Thank you.
Choosing the right insurance coverage for multifamily properties isn't that complicated, if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.